Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come.
Yeah, Wednesday. What's up, everybody? Wednesday morning edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson, as we are coming at you as the markets continue to show weakness. We are down about 5 points in the S&P as it's been a really tough week so far this week. So we will see what Ash Wednesday has in store for the markets today. If you're new to the channel, do me a favor, click the subscribe button, hit the notification bell so you get the alerts and the updates when they happen. And then also, if you are not new, do me a favor, leave a comment, leave a like, leave something down below. So let's go ahead and talk about it. So one of the things we mentioned yesterday was the simple fact that our 4-hour trend has changed direction. So when our 4-hour trend changed direction, we do still have demand levels below us. But one of the things we've got to remember about every one of our demand levels below us is that they have lower probability. And so my rule is very simple. In a downtrend, every demand area becomes a confirmation entry. That's the way to think about it. In a 4-hour downtrend, every demand area has to become a confirmation entry. So yesterday, on yesterday's market sell-offs, we didn't really get any entries in any of these longs. And matter of fact, we had our breakdown short that was still running. So none of these longs actually gave us a reason for an entry because we'd switched to a confirmation. Now, with the continuous move down, we came really close to this area here that we had put in as, you know, in case we had reversed, but knowing that we may not reverse, we had talked about the breakdown below this area in here, and that's kind of what we saw. That's really where price sold off. We were up a little bit yesterday in the morning, but not enough to really add any bullish sentiment. And we're seeing very much the same picture today, right? We're seeing very much yesterday when we did the daily market commentary yesterday, it looked like this, and we have a very similar picture this morning. So we are in no way, am I willing to look to the bullish side as of yet. We have this little 3089 area down here that we did bounce off of. Off that 15-minute chart. But when I look at this, we now need to start looking at daily charts for our next area of demand. And we are coming into the area which makes sense for a little bit of a demand zone pullback. So right here, 3100 would kind of be where we would go. Now we have just in about 3 days wiped out all of the gains from the prior. From the whole year, from the prior 2 months, as we are now down on the year in the S&P. But one of the things to consider is, should this drop have surprised you, right? Should this have been a surprising drop? And the answer to that is no. This is, yes, coronavirus is what spurred this on, but we saw a couple of clues that cued us in to this, and the big one being that slowing of momentum, right? That slowing of momentum on the way up, which we had spoken about for a couple of days, was this huge momentum coming down as price was rallying up. So now what am I looking for is where do I have a chance to get back in? Well, the downside of this is that with all of this momentum now straight down, we're having a very difficult time finding a supply zone on a retracement to get in. So we're still looking for potential breakdowns as our best way to get an entry. So I would say, just looking at what we see here from yesterday's market is that we could have, the cleanest area. I'm actually going to take this one and move it to right here. The cleanest area is this little wick over wick level right in there. And that's the one that, frankly, would be a limit entry at this point with that wick over wick stop above the pivot. Would be what I would look for. And if we get some basing, just like we talked about yesterday, you could get a little bit of a jump up from here. So there's a chance for a little long above here. But now, right, we're in a 4-hour downward trend. The only way I could take a long is on a breakout to the upside where I have quality basing. and my shorts become limit entries, right? Now, every long has to be a confirmation entry down below me. So hopefully that makes sense to everybody, because we're going with the direction of the big picture trend. When we look at our top performing trades, which meaning we use our trade optimization plan, we're scoring where we believe the turning point would be. All right, looking over to the Nasdaq. Nasdaq, very similar picture. So, we have some demand down below us, remembering that demand below us is still confirmation entry territory. I'm going to move this level down to here, which is our wick over wick area right here. 90.90 by 91.50 is a quality area for price to potentially return. And if price returns back to that region, that would be a nice area for a touch and go, a little bit of a level. We could set up for another breakdown out of this region, and these 2 hourly levels of demand, I still need to make sure that those are confirmation entries if I want to give those a go. Now, looking at this on the daily chart, whereas the S&P has come back down to that 3100 level, we've got a little bit of demand here, but it's not as quality of demand as the S&P market is. So believe that would have a better price chance to continue to come down. Taking a look at the Dow real quick. I don't normally look at the Dow in this room, but one of the things that we did have yesterday in the Dow. So the Dow on a 1 hour chart. Actually, we had our breakdown in the Dow yesterday. It came down, hit both of our targets. We did on Monday get a little confirmation entry in the Dow, and it rallied up off of that zone. And then we got yesterday's as well. So whereas the S&P has blown right through these levels, the Dow's actually kind of respected them from a confirmation entry standpoint. So I know a couple people told me that they had taken some longs in the Dow and were able to jump in on those. But we're coming down to all of our price targets right now in the Dow Jones overall. So I'm going to wrap my lines around the wick over wick area here, and then just remove some of these other levels. Once again, these were our breakouts that we had set up in the Dow. All right, let's move over to crude oil. Now, crude oil also continuing to come down. Our anticipated price in crude oil was this 48 region, and we are really close to it. We got a really nice entry yesterday off of this wick over wick level. Leave me a comment down below if you were able to take advantage of this wick over wick move. This came right into our level and got a very strong move away into our demand zone. And then, so this is your first target, and if it hit your target 1, 2, 3, 4, 5, about 6 candles later, you had gone nowhere, giving you an opportunity to get out of this demand zone level as prices continue to come down. So this wick over wick trade was really the best trade of the day yesterday, with price now coming down. We've come down to what our breakout point was, but we didn't get any quality basing before this breakout, so I can't utilize that for a breakout. And now we've got a little bit of a confirmation demand down below us. Now that confirmation demand comes from, I'm going to go all the way back, comes from this pivot right here. So we're going all the way back to a year ago, a little more than a year ago, to find this pivot area. But remember, because our big picture trend is down, it has to be a confirmation entry only. Matter of fact, we're basing in front of that level, which makes it that much weaker. So I'm actually going to remove it at this point. Just by the simple fact that we've got all this basing here in front of the level, it's going to reduce my reward to risk ratio. And so that would be the level that we would be looking for a reversal now. I mean, right now is actually a really good opportunity in a candle-to-candle style if you happen to be in it at this point. Other than that, look for a potential breakdown from that zone. Next would be gold. So gold is still kind of chopping between our areas of supply and areas of demand, surprisingly enough. I think that we've got this area up here of supply and then some demand down below us, but nothing really to add to what we've talked about earlier. All right, moving over to bonds and currency markets. In our ZN, which is our 10-year note, we did get a little bit of a breakout yesterday in bonds, and then it came up and hit our first profit target. Now, we identified this profit target from a Fibonacci projection move, as we use Fibonacci projections when we're at these high levels, oftentimes to find price targets. So price did hit the price target, and now it's starting to come back down, showing a bit of weakness. Now, so what that tells me, the fact that we're seeing a bit of weakness in the 10-year gives me a little bit of pause for this demand level down below me inside this 10-year note, that we may come down a little bit below this one. So I'm going to switch this to a confirmation because of the momentum shift that we're seeing. Matter of fact, it's putting in a little bit of a head and shoulders pattern. For those of you that use the head and shoulders methodology, you see that it's putting in a head and shoulders pattern here: shoulder, head, shoulder, rising neckline. Look to the area down below here. The gap fill is really the best zone for price to stop going down, and I would say that you've got an opportunity to get in on a candle to candle short if price comes back up here a little bit, and maybe even into this area here. Inside of the Aussie, so the Aussie, we got an entry here in the candle to candle, in the wick over wick area, where we had price rallied into this wick over wick zone, and then 1, 2, 3, 4, 5, 6 candles later, we'd gone nowhere, allowing you to take your stop and move it down, but then price continued to move down. So it's moving pretty well. If you didn't catch the reversal, so I'm going to remove the reversal level for this point. If you didn't catch the reversal, you've got the breakdown, and the breakdown is continuing to run. So that one's kind of continuing to go. If you're still in that one, we got to look all the way down here for our next potential kind of price target. Which is a long run. So this one could continue to run for quite a ways if you're willing to stay in it a bit longer. And looking at this, those of you who are here pretty regularly know that I look for this price pattern oftentimes, and that's what we have in this one. Now, if you missed it and you say, "Oh, I've missed out on the trade," we still have this area up here, this little wick over wick right here. Not a great time of the day, but a pretty good structure on the price action. The downside of that is we're getting a lot of selling pressure on all these wicks. The market keeps trying to come up, and it's unable to do so. Euro. So the Euro's actually found some strength. We found a little bit of strength in the Euro. We've come into our 15-minute supply level and gotten a little bit of a move away from that 15-minute supply. So we touched it, and we've come down from it just a little bit. If you took that, I would say take your stop and move it to break even. And this would have been a confirmation entry on that 15-minute Euro, because our 4-hour is trending up. So if you took this, it's a confirmation entry. And so you probably didn't get in until right down in here as it comes in and comes back out. So that level there, we're starting to get a nice little move away from that zone. I think you've got a decent price target right in here to look for price to come back to. And that's actually a decent little entry potential as well, right in here. So I'm going to remove this level at this point and just know that our next supply level up above us would also be a confirmation entry. Canadian dollar. So in the Canadian dollar, we are chopping right at the breakdown point and seeing some high upper wicks. So this is a great candle-to-candle opportunity at this point if you're not in the breakdown trade. If you did get in the breakdown trade, technically you haven't gotten stopped out. Your stop would have to be way up here. We didn't get any basing in front of the level, so this breakdown is still valid in this region. Next, Great British Pound, Japanese Yen. So the Great British Pound, a little bit of frustration here as it came into our supply level yesterday and then started to come down. It hit the area where we marked off as the target. Unfortunately, that's the word target, and I actually had my price target a little bit lower. And then it came right back up for a quick stop out. So unfortunately, this one did not give us a profitable exit because it just missed the target. And sometimes those are going to happen. But we've started to come down again pretty hard. This breakdown here does still exist, and we're seeing this market continue to give us a bit of a sell-off. There's going to be some supply up above. I just don't know when or if we're going to bounce up into that region. And so I need to go to a 15-minute chart to see if I see it any lower. And I've got this area right up in here, all these little wick over wick zones. But the way that they're kind of laying out, I don't know that they're going to be a quality reversal opportunity. and I don't know that we're going to make it quite that high. So I'm going to wrap my lines around this area here in case we make it back to this region. It's a very small supply level, but could get you a small entry. And then the Japanese yen, we've retraced our entire move back in the yen and now starting to come back down. So keep an eye on price basing here for a short opportunity if we base in front of there for price to continue to come down from that region. So I think that, remember what I talked about on the S&P, the only way I can get long is breakout longs. Shorts make sense on reversals or breakdowns, and then any demand area below me has to be a confirmation entry in this market. Looking at a weekly chart, our weekly chart is pretty strong down week and don't have any quality weekly demand for a little bit. So we'll see if this long wick here holds as demand, and we get a little bit of a rally back up from that zone. But if you have any questions, as always, send us an email, support@tradersarmy.com. Until tomorrow, everybody, I hope you have a great trading day. I will talk to you soon. See ya.